It's almost impossible not to be wealthy if you know and follow these simple steps. If you stick to the end, I'll walk you through those steps. Hello and welcome back to my channel. Today in this video, I'll teach you how to create and compound your wealth. People use different techniques to be wealthy. Some start passive income streams, while others start small businesses and grow them into big businesses. Many people though work for others, earn some money, save their earnings, and invest their savings. Investing means making your money make more money while you sleep. If you're a beginner or new to the field of investing, it's very normal to feel intimidated when other people talk about investing. People talk about stocks and bonds and options and other more complex investing tools. The great news is you don't need to know them at all and you will still be wealthy, and I'll teach you how. When it comes to investing, there are a couple of misconceptions. One of them is that you need a lot of money. And the other one is you need to be some kind of genius and you need to have a lot of knowledge in investing. Actually, for beginners, both of them are not true. You don't need to have a lot of money to start investing, and you don't need to have a lot of knowledge to succeed in investing. And I'll teach you exactly how to do it if you're a beginner. To start investing, you need a little bit of money. You can't start with zero. If you have some savings, you can start investing those savings today. If you want to invest more, then of course you need to save more. And you can save more by increasing your income or reducing your expenses, or ideally by doing both at the same time. The technique is earn as much as you can, save as much as you can, and then invest all of your savings. To create wealth, it's very important to shift from being a consumer to being a producer. One way to do that is to own companies that produce products and services. Investing in index fund allows you to own a small piece of all of those companies that are out there. Now let me address the knowledge part. You don't need to have a lot of knowledge to start investing. You definitely don't need to be a stock market genius to start investing. You can be a beginner and do very well if you just follow some simple steps. If you're a beginner, you don't want to start investing into individual stocks. You definitely don't want to start buying and selling options. For beginners, the best way to start investing is to buy some index funds and hold them for a long time. The research has shown that the index fund investors come actually above 90% of all investors. Investing in index funds guarantees that you get your fair share of the US company's financial performance. The S&P 500 has a historic annualized rate of return of over 10% since its inception in 1957 through the end of 2023. And you're guaranteed to get your fair share almost without any effort and knowledge. No other place or business on this earth guarantees you that kind of fair deal. So you want to get started by investing in index funds. So in the meantime, you can learn about investing if you want higher return than the market return. If you want higher than market return, then you need to learn the tricks of investing. That involves reading many companies' annual reports, analyzing their financial statements, and understanding the market and the economy. And that all takes time. You don't want to wait until you learn the techniques of investing to start investing. So the best way to start investing is to start with the index funds. Now I'll show you some of the best index funds that are available out there that you can invest in right away. If you have retirement accounts like 401k, 403b, IRAs, health savings accounts, or 529 plans, you can use the same techniques to grow your investments in those accounts. Now here we are on Google looking for the best index funds. I'm going to go ahead and search for the best index funds, and you'll get a bunch of websites listing those best index funds in their opinion. I'm going to just go down to one of those. In this case, I'm going to go down to NerdWallet. You can read the article if you want to, but I'm going to go straight down to the list of the 5 best index funds that are tracking the S&P 500. So I'm going to take a look at the minimum investment column. Here, 2 of them have minimum investment requirement. Vanguard 500 requires $3,000 of initial investment, but the 3 don't have any minimum investment requirements. That means you can invest any amount you want or any amount that is available to you for investment at this time. On the rightmost side is the expense ratio. That's one of the most important factors you need to consider while investing in index funds. The lowest is the best. This is the cost to you on an annual basis to own that index fund. So here is the Fidelity Zero Large Cap Index Fund. It's with the 0% expense ratio. That means you are paying no amount or no fee to own that index fund on an annual basis. We're back on Google doing some research on Fidelity Zero Large Cap Index Fund that we found from our search. Here is the symbol for that index fund. I'm going to go ahead and search for the details. Here is the little click more about the Fidelity Zero, and click on that. I'm going to take a look at the 1 year rate of return. In this case, the index fund has a return a little over 26% over the last year, which is an awesome return. Don't expect to get this going forward all the time, though. These are exceptional times. 5 year, over the last 5 years, it has returned over 83% return. On the right side, you'll see the year-to-date return. You'll also see the Morningstar rating for the fund. And then also towards the bottom of that, you'll see front load. If the fund had expense ratio, you'd also see that on this table, but this one is a 0 expense ratio, so you won't see that line. The front load is the upfront cost that you'll pay to own that index fund. In this case, there is none, which is a great sign. Take a look at the compare to section here on that website. I'm going to click on the Fidelity 500 index fund, and that's going to compare those two here. And as you can see, both have very similar performance because both are tracking pretty much the same companies over the period. So I'm going to click on the Fidelity 500 index fund and then look at the same things, right? So I'm going to look at the 1 year return, which should be pretty similar. 5 year should be pretty similar. On the right side, as you can see, the year to date return is similar. This one has the expense ratio of 0.02%. So that is the total cost that you'll pay of your portfolio amount on an annual basis to Fidelity to own this fund. Morningstar rating of 5. And then, of course, further down, there is also no front load. That means this is also one of the great funds to own. So we are here on Fidelity account. You can go to any broker's account and buy those index funds. By the way, they have their own if you want to look at theirs. So I'm going to go to my Fidelity account and go to Accounts and Trade. I'm going to click on Trade, and then this gives me this page. So under the Trade drop down, I'm selecting Mutual Fund, and then, of course, my account that I'm trading this under. And then, of course, the Fidelity Zero large cap index funds fund that we found earlier during our search. I'm going to put that in the symbol. As you can see, there is no minimum investment amount, so I can invest any amount I want. If you want to read the prospectus, you can go ahead and do that here. That's the last closing price. Under Action, I'm going to select Buy. That's what we are doing. We are buying that index fund. And I'm just going to say I have $10 saved at this time, so I'm going to buy Fidelity Zero large cap index fund with $10 of my savings, and that's perfectly fine. I'm going to preview my order and make sure that everything here looks good. And if it looks good, I'm going to go ahead and place my order. If I want to invest a different amount, then we can click on the edit button here and then go back to the dollar amount field and change the amount. And again, that changes the estimated order value to $1,000 based on what we input. Review the order, make sure everything looks good. And then if everything looks good, just click place order. That's how simple it is to go out to Google, search for the best index funds, and then do a little research on the ones that we like, look at their expense ratio, look at their annual return, look at the Morningstar review, look at if there is front load cost, and then buy that index. So it's pretty simple. Now you know how to find some of the index funds. Now let's take a look at the power of compound. We are back on NerdWallet account website, looking at the compound interest calculator. The initial setup that I have here is we are starting with $10,000 of initial investment and making monthly contribution of $2,000. The reason that we selected $2,000 and monthly is because that comes out to $24,000 for the whole year, which is pretty similar to what you would have contributed if you were maxing out on your 401k contribution. So, depending on your situation, you can tweak any of these numbers. Now here I have the years of growth set at 20. Let's say if you're 40 years old right now, and if you want to compound until you're 60, you got 20 years ahead. And so I left that at 20. Now the 10% estimated rate of return, the S&P 500 has a return, an annualized average rate of return very close to that percentage. So I left that at 10% to keep it simple. And then that's compounded annually. With that setup, it gives you $1.5 million at the end of the 20th year, total balance to your portfolio. That's a very handsome amount here. Now, if you're starting early, let's say you're 20-year-old and you got 40 more years to go until you stop compounding, the actual setup that we had for the initial investment and the contribution amount monthly, with that, you got $11.5 million of total balance on your portfolio when you're 60, if you start when you're 20. So again, you want to start as early as you can, and you want to make as much contribution or as much investment as you can. The best thing about this whole chart to me is the composition of the two different amounts here. If you look at the bottom blue shaded area of this chart, that is the actual contribution you made in dollar amounts, right? So total principal contribution is less than $1 million. And then if you look at the light green shaded, that is all market return. So the $10.5 million came from the market as a return to your $1 million of investment. Thank you so much for your time today, and I hope you come back for my next videos. Bye-bye.